So I'm COO at Iconic, which is a technology company for fan engagement in sports and entertainment, based in Monaco. And other than that, I work with regulators and financial institutions in Israel and around the world regarding everything that has to do with fintech and growing. I'd say with the speed of technology and kind of adapting to the changes that are happening around us. All right, so I think that one of the interesting developments that kind of like happened around us that have to do with tokenization is CBDC, central bank digital currencies, and the question of, is this the future? Are we watching the future of money? And we've been speaking about digital tokens as an investment tool during this session, but digital tokens are also be seen as, I'd say a form of currency. And many of the initiatives and startups that are around have actually been using them in this way as real digital currency, as something that you can pay with. And it's very interesting because all of us kind of like saw in 2009 I'd say two inventions coming to the world, two separate products that one of them was the coin itself and the other is the underlying technology of blockchain. And it kind of connects to, I'd say that we're kind of like seeing a question that, we're all kind of born into a paradigm where the governments are the ones that are issuing currencies, but historically that's not necessarily how it worked. And we're kind of like in a stage where, currencies can actually be created by anybody, okay? And we're at the point right now that technologically any one of us can create a digital currency in itself. And I think that the question is kind of like, what's the use case? And we can speak about this for hours and hours, and philosophical questions of why would people want to do this, and where is this leading to, and is it giving power to the people, or is it kind of like taking us backwards? And kind of like we can talk about this, but I'm not going into this. I do want to talk about like kind of like another milestone that happened after Bitcoin came out, which was last year when we kind of saw a use case for digital currencies created not by individuals and not by governments, but rather by a company. And I'm talking about Libra of Facebook. And all of us kind of understand why Facebook wanted to create its own digital currency. And we're talking about, saving commissions and, enlarging their customer base into unbanked people and having the data, which is very, very important, and the power that has to go with this. But one of the problems was that this initiative was stopped, I think, because the idea of having I'd say a technological company that has 2.7 billion users create a new kind of currency, and even if they they want to create a stable coin, so they're putting a basket of regular fiat currencies in the background and issuing tokens, is kind of like they're becoming one of the biggest central banks, if not the biggest central bank in the world, and that kind of raises questions, right, on macroeconomics, like what about the amount of money that's circulating in any country or in the world, and what happens to the control of the regulators over macroeconomics. And so the reaction of the regulators was kind of like expected. Zuckerberg was called to give testimonials. The Libra was stopped. France says it would stop Facebook Libra in Europe. But two things kind of happened at the same time, and I'm kind of like taking us a year back. And one of them was that China came out and said that they're going to be creating a central bank digital currency form of money by the People's Bank of China, and it's going to be their legal tender. And on the other hand, came the governor of the Bank of England, Mark Carney, that came and said, why should, he asked a question that sounded kind of far-fetched at the beginning when he said it. And he was asking, why do we need to have dollars, as the heart of the reserves and the global monetary system? And why don't we have something that, some sort of currency that is created not by a government and a country, but rather by a different body? And, when he said this, it was kind of weird. At the time, but then in the World Economic Forum in Davos in January this year, everybody was starting to talk about this, and economists were saying, why do we need the dollar as a reserve? And what happened after that was kind of like a snowball effect, I'd say, where different countries were starting to think about the idea of creating digital currencies of their own, kind of like to counteract the idea of having a technological company come up and create this by themselves. We're talking about the US, which kind of like accelerated this idea the moment that COVID happened, and they understood that they want to give funds to citizens that don't have bank accounts, and they were saying, okay, why don't we just create a digital currency and create digital wallets and put them in the Fed itself, and create a little bank account there that doesn't have any commission. And then they kind of like, retract with that idea. But the idea is that if we're looking around what's happening, we're seeing that there's kind of like a global arms race of creating digital currencies all around the world. And we're talking about Japan, and we're talking about South Korea, and we're talking about countries in Europe, and suddenly everybody now is talking about creating digital currencies. The question is, where is this going to lead? I think the most advanced country right now in this effort is China, which has already spread out their digital currency, and they're thinking about different ways to kind of like incentivize the citizens to use this. And I think this kind of raises an interesting question that we can't go too deep into, but it's important to mention if we're talking about tokenization, because one of the, I say, benefits of having things tokenized, including money, is that with each transaction, something else is created, and that's the data and the digital footprint that is created. Because the moment that you have digital currencies or anything digital, you can track where the asset has been and who traded hands and what people are interested in and what they're willing to buy and pay for. And that kind of like raises a question about, I think, the future of money in regards to what data is being.
Oh, Meirav, we've lost you.
People are going to be watched.
Sorry.
What?
We lost you
Sorry?
for a second on the sound then, but we've got you back.
Sorry. So I said it's really interesting to kind of like look at tokenization in regards to data and the data that's being collected, and if you kind of connect it to the idea, you're taking money and digitalizing it and creating digital currencies, and then you have the data about where people are buying money, and you kind of connect it to the social credit scoring that China is kind of like thinking about and starting to implement in China, and people are being giving scores about what they're doing and how they're behaving, and is the next step people being scores on what they're spending their money on, and what can we know about people, and how can we kind of direct the way of people's behaviors and thoughts according to what they're doing with their currencies, right? So I like to summarize everything that we've spoken about, because I think we're living in a very interesting time, and we're kind of we might be witnessing the next stage in the evolution of finance and of money and on investing. And this whole time is kind of like kind of circling back and saying that we're kind of like seeing paradigms that we're all kind of used to changing around us. And if I need to end it, I'm going to quote Gordon Moore, one of the founders of Intel, that have said that change has never happened this fast before, and it's probably never going to be this slow again. So that's from my end, my thoughts about this whole tokenization issue.
Thank you very much. Yeah, it's a slippery slope once you start to get into how people spend their money and how we hold that data and how we use that data. So definitely one
like
for.
It's a two-sided kind of like story. You can look at it from both sides. There's good in this technology, and there's questions like, do we want to go there?